we feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me, as always, is Mahima Vachirjani, and we'll take you through the next 1 hour of trade. Mahima, morning.
Morning, Alex.
Well, it's looking like a good Thursday so far, but the pretty picture that you saw at the start of trade, it's not as pretty as that because you've given up a little bit of gains. Of course, you have traded into lower territory for the Nifty 50, but we bounced back from the low point as well. We're trading with gains of just about 0.2% for the Nifty 50. Interestingly, the Nifty Next 50 is doing particularly well. So if you thought that large caps are underperforming, that isn't necessarily true because you have the Nifty Next 50 that's trading with gains of 1.3% or thereabouts at this point, and it builds on the outperformance that it had yesterday as well. You have the mid-cap index that's trading with gains of about 1% or so, and the small-cap index that's holding on to gains, trading higher by as much as 1.6% or so. And so quite a lot of strength in the broader markets at this point. You thought that the banks would be gaining in trade today, and it was a perfect expectation, but that hasn't really held through for the session so far because you have the banks as a pack that are only about 0.1% higher, and of course the context is the liquidity measures that have been announced by the Reserve Bank of India that will push the system liquidity back into surplus. So you have quite a few banks that are gaining. Unfortunately, you have once again HDFC Bank that is proving to be a laggard and a drag, not just for the Nifty Bank, but also for the Nifty 50, as it was the case yesterday. But Mahima, let's go across to our guests straight away and let's kickstart the questions that we have. And why don't you keep your first one ready while I introduce them? Shahina Mukaddam, who's independent market expert, and Kush Bora, founder of kushbora.com, joining us this morning. Good morning to the both of you. Kush, very quickly, I'll come to you first. We saw some short covering yesterday, and you saw a broad-based up move. Some bit of fatigue maybe at the start today. I don't know how far we can take this rally upwards, and some people have also said that this move upwards might have been a dead cat bounce. What do you think, and what are the levels to watch out for the benchmark?
Hi, morning Alex, morning China. Well, no. I won't treat it that way. The reason we are seeing some sort of, a muted performance today could well be attributed to the weekly options expiry. We did have massive call writing around the 22,300, 22,400, and even a bigger one at the 22,500 mark, and that's where the Nifty is turned from today as well. So I won't read too much into today's muted move as long as we're staying positive. That's still a very welcome move. What is heartening to see is that the small cap and the mid cap traction that we saw kickstart 2 days ago picked up steam yesterday and is continuing today as well. So if that's any indication to go by, then I think this rally is perhaps here to stay. Yesterday in the closing show, we discussed two levels on the upside, which is 22,500 as the second target once 22,300 was achieved, and then the next one you're looking at is close to the 22,800 mark, where there is a gap to be filled, and also the 20-day moving average that needs to be tested and taken out for the index to move higher. So I think we're firmly on the rebound trade. Slightly early to call it reversal trade, but I would suggest there are signs for that as well. So yes, on the upside, look for a rebound to 22,500 again and 22,800. This rebound might just be here to stay for some time.
All right, so that's the view with respect to Nifty as a whole. But let's move on to the first query. Anvesh from Hyderabad has bought PTC India shares at an average price of 217, and he wants to know the prospects of holding this strong for a longer term perspective. Shaina, in terms of the Q3 performance for this counter, volume growth was good, but there is some regulatory overhang on this particular counter. What's the view like from a longer term perspective?
Well, I would say at current levels, it does look like there is a short-term bounce, given the fact that the stock has corrected substantially. At the same time, I think there was some disappointment in the third quarter numbers, and I would believe that for some time maybe that there could be softness. But if you're a long-term investor, it makes sense to continue to hold. You could see some consolidation because PTC, even if you compare it to something like an REC, is still more expensive. So to that extent, I would see the consolidation phase to be a bit longer. But I would say you can hold for the long term. If you have a short term view, then you can exit.
All right, I believe we've got our first caller of the day. Dheeraj is calling us from Hyderabad. Hi Dheeraj, good morning. How can we help you today?
Good morning, Alex. My query is regarding Medi Assist.
Okay.
I'm holding 220 shares of Medi Assist.
Bought at levels of 505, right?
Yeah, 505.
What was the thesis, Dheeraj?
A lot of FIs and DIs are adding Medi Assist in recent days.
Mm-hmm.
So, can we add at current levels again
Okay, and what is your time frame?
for the next 6 months?
Okay, so relatively short term. 505 is a buy level, 459 is the current market price. Kush, what is the potential upside over the course of the next 6 months? I'm not sure about the volumes, I've not looked at it, but 3,236 crore market capitalization.
Firstly, I must say that it's not a bad level at which he's bought. It's still on the way down. I mean, the buying was on the way down, but not a bad level at all because the stock actually slipped from significantly higher levels of about 700 plus. So he still ventured or braved a trade at a significantly lower level. Now, yes, there is momentum on the upside. There is positive divergence, and that is playing out today. I won't be surprised to see the stock see his buying price and then move higher close to 550 levels, and once that is taken on, perhaps even a 590 in the 6 month time frame that he holds. The reason for that is that on the way down, the volume started thinning. There was consolidation. So I think there is momentum building up in this stock. However, on the upside, you have to look at 485 as the key level. That's the 20-day moving average. Once that is taken out, then immediately 550 and 590 come into play. Also, because it's a trading position, a stop loss is a must, and that comes in at the low that the stock has recently made, close to the 430 mark. So keep that one in place. But there is definitely positive momentum building in this.
All right, so that's the view with respect to Medi Assist. The next counter that we're talking about is Bandhan Bank. Bhanu Prasad from Bengaluru has purchased 160 shares at an average price of 195, and he wants to know whether he should keep holding it or sell at the current levels. Shaina, with respect to this counter, what are the views like from a longer term perspective?
Yeah, Bandhan Bank, after going through a phase of a lot of corrective, they had a lot of NPAs, write-offs, also issues regarding their the location and the issues that were there surrounding the north. But now things are evened out, and I think valuation-wise, Bandhan Bank does look like quite attractive. So I think it is a hold from current levels. You can review it maybe a couple of months down the line, but you can hold it as of now.
All right, so hold is the view coming in on Bandhan Bank. Our next caller, Surya from Karnataka, is calling in. Surya, very good morning to you. How can we help you?
Yeah, very good morning to each and everyone. Thanks for taking my call. So the query is on EMI Limited,
Okay.
and I would like to know the long-term prospects of this company after the income tax rebate given to middle class. So would like to know the long-term prospects of.
Okay, so you've seen the fundamentals of the company already?
Yes, I did that.
All right, and did you just buy these shares because you're right now sitting on a loss of around 310 odd rupees?
No, I wanted to invest in this team, like a discretionary income will go up in the coming days for each and everyone alike. So on that basis, I thought, let me take up this play.
Okay, got it. Got your point, Surya. Shahina, I'll come to you. The point that he's making is, absolutely correct, because with the tax, benefits that we've recently received in the budget, FY26 is when, all this starts to play. What's the view like? Because electronic marts so far in the past few quarters have, posted a sub-single-digit growth in terms of, its revenue. But in terms of longer-term prospect, what's the view like?
Well, it looks quite attractive. It's of course in the EMS space. It looks quite attractive in terms of valuation and in terms of numbers also. If you saw the last quarter also numbers, they are showing a decent growth. So I would say it's a hold from here. It's of course a small cap in the EMS space, but it's a hold.
Interesting. Just let me extend that a little bit further since we're talking about EMS. Would you say that some of the other players that may have seen a decline in the recent past are also looking a little more attractive than they were about 4 months back, maybe?
Yeah, I would believe that we've seen a lot of correction that's happened in most of them, but even some of the smaller ones we've seen a bigger correction. I would prefer those over here like a Dixon. I would prefer something like a Cyient. There, I would believe that even the next quarter may be dull, but if you look at it over the medium to longer term, I think a lot of the correction has happened or is it's behind us. So I would look at that as a alternate CMS space.
The next question is on Indigo Paints, and there is, of course, a positive tailwind for paint companies in the form of lower crude oil prices. This is very important from the perspective of their raw material costs. We've got Srujan, who's writing in from Hyderabad, that has bought 300 shares at a price of 1,580. Should he hold or sell is the question. It is a considerable loss that he's incurring right now. So I'm going to come back to you on this one, Shaina. On the fundamentals, there's a lot that's been said about pressure in the paint space, about pricing pressure, some of the larger players losing market share. Indigo Paint specifically, if you are incurring a significant loss, do you hold on?
I would say that you can hold now, but at the same time, the overall paint industry is going through a tough phase. And while raw material costs will come off because of crude oil prices coming off, to an extent, the competition is likely to increase and the overall revenue realization is going to be under pressure. So margins will remain under pressure. So, and also valuations for Indigo Paints is a bit on the higher side. If you look at it on price to book basis also, it's more than 5 times. So I would say if you're a short-term to medium-term investor, it's better to exit.
Our next caller is from Bengaluru. V. Murli is calling us. Hi Murli, good morning to you. And how can we help you?
Good morning.
Good morning.
Good morning, and thank you for taking up my query. I am holding 200 shares of Triveni Turbine.
Okay.
Purchased recently at the rate of 524.
Okay.
And the thing is, turbine, they are saying a lot of export orders, their order book is full, and they are doing consistently good performance. Though it is a little bit expensive in compared PE levels, considering the niche player, can I hold it or add more or switch?
Okay, switch. So, am I right in assuming that you bought it for the long term based on the fundamentals, based on the order book?
Yeah, for a period of 6 to 1 year. 6 months to 1 year.
6 months to 1 year. So, it's relatively short term. Okay. So, from that perspective, then, Kush, he is in the green. The stock is doing particularly well in trade today, up 8%. Where does this take us in the near term?
Well, even now as we speak, the stock is in a downward sloping channel. It's rebounded precisely from the lower band of the channel, which comes close to the 465 mark. Now it is incidental that the 545, 550 zone is where the 20-day moving average is, and also the upper band of the downward sloping channel, that we just spoke of. So my suggestion would be, one, continue holding on to this one. Keep 500 as your close moment. You should consider adding more because the stock will pick up momentum once this resistance zone of 550 is crossed. So on the way up, which is pyramiding, and which is the kind of trade that I usually like and suggest, is what you should consider. So currently the view is hold with a stop loss of 500, add more once the stock crosses the 550 mark.
So that's the view with respect to Triveni turbines. The next counter that we're talking about is ITC. Karthik from Hyderabad has bought it at the price of 405 and he's holding around 166 odd shares. He wants to know whether he should sell at the current levels or add more to average it out. Shahina, with respect to ITC, what's the view like? Now that ITC Hotels is separated, the focus is on FMCG growth as well as the cigarette volume growth.
So I think both in terms of growth as well as valuations, ITC continues to look attractive. Sorry. So you could look to add, but you could look to add at slightly lower levels. I mean, not much lower, maybe something close to about 390. You could look to add and then hold it for the longer term.
All right, so that's the view with respect to ITC. We have our next caller, Shankar from Chennai is calling in. Shankar, a very good morning to you. How can we help you?
Very good morning. Actually, I bought past 15 days, Narana Hidalaya,
Okay.
5 shares, all-time shares. My average buying rate is 14.
Okay.
Totally, I have at present 90 shares.
Okay.
I am waiting, I am still waiting for more than 5 to 10 years. Just I want to know, Narana Hidalaya will perform like Apollo Hospitals in share price. That
Okay.
means I want to question, is any chance to move to 6,000 rupees above in long term?
Okay, got your query. That's an aspirational target, I must say, Shankar. Shahida, he's saying that will Narayana Hrudayalaya perform the way Apollo Hospitals has, and will he achieve the target of 6,000 in the next 5 to 10 years is what he's asking.
Well, I don't know about whether in the 6 to 10 years time it will be like Apollo Hospitals. Apollo Hospitals hopefully will be multiple times what it is now. Because I think if you look at the overall space, Apollo Hospitals in terms of valuations is still more attractive than all the others in the space, given the fact that not only is it the largest, but also it's got the largest number of hospital beds and it has improved its balance sheet, etc. Narayana Healthcare by itself also definitely looks good. And I would say that if you're holding it for maybe a year or two also, you could see a price of close to about 1,650, 1,700. So there also the growth is coming. It's doing pretty well. They're going to add, I think, close to about 1,500 beds over the next, maybe couple of quarters across states like Bangalore, Kolkata, Raipur. So it is growing. It's a good management. So you could continue to hold by itself. If you want to add, you can add Apollo Hospitals also.
Add Apollo Hospitals. So why settle for the growth story of one company? And by the way, look at that divergence. It's quite stark over the last couple of months where Narayana Healthcare has just gone through the roof. And so the relative valuation picture that Shaina is laying out for you is quite relevant at this stage. Let's talk about the next question, and this is Garware, Technical Fibers, and this is a stock that is 7,000, nearly 8,000 crore market capitalization. Like the rest of the market, actually, it has dropped about 19% over the last 3 months, and we've got Shanta from Dubai, who wants to buy 300 shares at the current level for a period of 1 year and wants to know what the prospects are. Basis charts, Kush, is this a good idea?
My suggestion would be hold up just a bit, because 800 is the level which is not only a psychological mark but also medium-term resistance, and also at the moment, from a technical standpoint, there are the 200-day moving average and the 50-day moving average converging. So you could see some traction, around that level. If that level is not conquered, then the stock might consolidate, perhaps with a negative bias, and it's not too far off, right? So my suggestion: hold up just a bit. Let the stock close above the 800 mark. That's when you can start accumulating. And let's say from a year perspective, you're looking at targets of 860, perhaps even a 910. And in that case, the stop loss will come close to the 745 mark. So as I said, not too far. Wait for the 800 level to be crossed and give a closing above that level. That's when you can start considering Garware, Tech Fibers for a long position.
So keep an eye on the stock price, and it's not too far away from the level that Kush thinks that you should think of accumulating. Our next caller is also from Bengaluru. We're getting a lot of callers from Bengaluru. By the way, quick reminder, if you're watching this and you'd like to speak to us, that number at the bottom of your screen is where you can call us. Chetan is calling us. Good morning, Chetan, and how can we help you today?
Good morning, everyone. So I'm holding Jupiter Consulting.
Right.
381
Yeah.
on an average of 281. 100 shares. I just wanted to know for long term how it will be the stock. And I have one more stock of South Indian Bank.
No,
So
Chetan, apologies. I'm going to stick to one stock because I need to take more queries. But then Jupiter Wagons, talk to me about when you bought this and what the thinking is. You aim to hold for the long term?
Yeah, I bought it recently, so
Okay.
I want to hold it for long term because of the recent news what we had in MP about the recent changes in the companies. So just wanted to check what is the long term view on this stock.
Okay. So it has seen a correction, and quite a considerable correction at that, in the price, and valuations are looking better than they had. In fact, even 3 months back, the drop is as much as 40%, Shahina. And so he is making a profit at this point. Should he add more to his position for the long term, and what are the prospects based on the fundamentals?
Well, I think it's extremely expensive, even though, we've seen this huge correction. They have actually indicated that they are going to raise further funds. They have indicated something like 3,000 crore odd QIP that they're looking at. And so till then, I think the stock will hold current levels. But at the same time, if you look at it compared to market cap, it's quite a percentage of the market cap. And the new projects that they have put in place, or that they're going to utilize these funds for, will take a couple of quarters at least, like maybe a year or year and a half, to start contributing to their numbers. So if you have a really long term holding, then you can hold. Otherwise, I would say that you can start booking some profits. It is showing a bit of bounce, so you can take these levels and start booking some profits.
Booking profits is the view coming in on Jupiter Wagons. Next caller, Nikit from Hyderabad is calling in. Nikita, very good morning to you. I believe you have a query on another rail counter, that is Titagarh Rail.
Yeah.
Tell me, go
Actually,
ahead.
I bought it at 675.
Okay.
So I want to know, should I hold or can I add some more?
Okay. So Nikit, when you bought Titagarh, did you see the charts or did you see the fundamentals of the company?
No, I didn't see the fundamentals of the company. Actually, it got a very good correction. That's why I
Okay,
bought.
so you saw the charts. All right, Nikit, I'll take your question with Kush. Kush, Titagarh Rail is the counter. What are the charts looking like, and what are the supports and resistance that you're seeing?
Well, it's not a very compelling buy, just because the stock's fallen quite a bit of the deal from the high levels. Just because of that, it doesn't make a good buy. However, along with the market, this stock is seeing a rebound. So first, actually, kudos to him for buying at a fabulous level, to begin with, and having the courage to actually buy it when the market wasn't really all that great. So kudos on that. Now, my suggestion would be don't add more, because there aren't very strong signs of an up move on this one. So your buying price will now be your trailing stop loss. So hold with a trailing stop loss around the 675 mark, which is your buying price. We are already seeing volumes thin down on this one. So that could perhaps mean that the momentum might perhaps fizzle out a bit. But you could still see the stock surge to 760 level once that is taken out, perhaps even a 790. But around and close to those levels is where I will start booking my profit. So as I said, from a near-term perspective, it's a good trade to get into because of the price at which he's got into. Now use trailing stop losses and hold, and keep booking profits around the 760 and 790 mark.
Okay. All right. Strides Pharma. Let's pull this up and look at the year-to-date chart. Actually, considering the kind of drop that you've seen in the broader markets, this is a stock that's dropped only about 9% or thereabouts over the last 3 months. And we got Mr. V.S. Bhatt, who's writing in from Bengaluru, who has bought 50 shares at a price of 696. So he has bought at slightly elevated levels because the stock is currently trading at 619. He hasn't specified actually he has. 1 to 2 years is his time horizon. Based on the fundamentals, we've seen more interest in the recent past, Shahina, on some of these pharma names or broad healthcare names. Would this be something that you would like to buy and hold?
Well, I think for the shorter term, it looks like it's going to continue its, downward trend. Basically, the numbers actually seen in the last quarter also were a bit disappointing, and we are likely to see some bit of duties kick in. I mean, of course, we'll hear all about it next couple of months, in the US market, and I think that will affect most of the CDM players, including Strides. So I don't think this is the right time to add average. If you're holding it, then I would also suggest that you could try to exit if you're not making too much loss.
Very quick follow up to that. If you were to exit, would you switch to another pharma stock, and if so, which?
Yeah, I mean, I think as of now, some of the pharma stocks that look decent, despite having exposure to US market, are like something like a Biocon, where they have recently got approvals and there's some settlement regarding their manufacturing facilities. So to that extent, I think in terms of new product pipeline, Biocon looks good for the shorter to medium term. You could also add a Cipla or a Dr. Reddy. Dr. Reddy, in terms of valuations, look interesting despite having a huge exposure to the US market.
Biocon got a few approvals just this week in the cancer treatment space,
Right.
so it looked good. We have to slip in a very quick break. We've got more questions that we will ask on the other side, so I'd invite you to stay tuned.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
All right, welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the number that's flashing on your screens right now. The next query is on Adani Wilmar. Tarun Agrawal from Ranchi has bought 150 shares at 325 a piece, and he wants to know whether he should add more or exit it. Shaina, I'll come to you on this one. In the recent news, it is acquired GD Foods. Plus, Adani Enterprises has decided to fully exit the Adani Wilmar JV, and Wilmar will increase its overall promoter holding to 75% to fill the gap of the overall ownership. What's the view like, once the JV is exited, and what is the outlook like?
In terms of exiting the overall, Adani Wilmar exiting from Adani Wilmar, the Adani Group, it makes sense actually because it's not their core area. And also in terms of, the performance that we have not really seen the stock perform right from listing to now. And I would say that while the performance may improve, given the fact of the acquisition also they recently have made just last week, the announcement has come. I think the overhang of the stock, because still there will be some overhang because the two combined continue to hold, I think, 88% or so of the equity. So even after the dilution, there will be some overhang. So I would say it is better to avoid Adani Wilmar. Rather than that, better to buy something like an ITC.
All right, so that's the view with respect to Adani Wilmar. Satish from Bengaluru is our next caller. Satish, a very good morning to you. How can we help you?
Good morning, madam. Nice talking to you.
Nice talking to you as well.
Yeah. Actually, my query is on SDFC Life.
Okay.
I have purchased actually 250 shares at 649 rupees.
Okay.
And I'm making quite a loss actually.
Right.
So I just wanted to know actually what is the growth potential for the insurance sector on a whole like.
Okay. Okay, got your query, Satish. Shaina, I'll quickly come to you. He's sitting on a loss of 8,000 odd rupees. What's the view like for HDFC Life, as well as what he's asking is that your take on the entire insurance space?
The insurance space is going through a lot of changes in terms of regulations, and there still may be some changes going further in terms of what is the amount of expenses that they can actually take into their books, as well as what commissions they can pay. So there is some regulations still that are likely to come in. I think the overall sector has been impacted by these regulatory changes that have been taking place over the last 1 year. In terms of valuation also, I think, HDFC Life is pretty expensive. So at current levels, I would say it is better to book your loss and look for some other sector as of now. You could relook at this sector maybe next couple of quarters down the line. But as of now, I would not be invested in the sector.
Okay, all right. And that's a fair point because there's quite a bit that could change in the way of selling of these products. The point that you made, Shahina, is well made. Let's talk about State Bank of India and let's pull up the intraday chart. You have just about a flat move in trade today for State Bank of India, but there are more and more watchers of the market and technical analysts that are saying that State Bank of India is looking attractive at this point. I'm wondering whether Kush thinks the same as well, because we've got Dinesh who's contemplating adding more to his position. He's got 300 shares that he's bought at levels of 700. So he's in the green and he's wondering whether to add more at the current point. Kush, what's the view?
Might not be a bad idea to add some more because the kind of move that the stock has seen on the back of recent volumes could well stretch up until the levels of 750, and once that is taken out, you're looking at the 780 kind of a level as well on the upside. So it depends on his time frame. But the first litmus test is the base formation that is in place around the 680 mark. The stock seeing an up move on the back of good volume. The second one is the crossing of the 20-day moving average, which the stock did yesterday, closed above that, and the seeing a follow through of that. So it's got a few factors going for it. Plus, Bank Nifty, or at least the banking sector, relatively speaking, at least the big names have had, a relatively stable, if I can call it, compared to the Nifty and the mid cap, small cap space kind of move. So SBI too, with the kind of momentum and the base that's already there in place, could well continue on the upside levels, as I said, 750 and 780. You might just want to keep stop loss at your buying price now. In case the stock falls, you might want to get out at a no profit, no loss kind of situation.
So, Kush has stipulated the litmus test for State Bank of India. Kush, googly question is red acid or base in a litmus test?
I gave up my science a long time ago. So.
Okay, all right. So maybe you can look it up in the meanwhile. But in any case, litmus test in the market is red or green. Let's talk about the next question, and this is coming in from Sanjay. Sanjay is calling us from Surat, and Sanjay, I believe you want to know about Avenue Supermarts.
Yeah, I'm holding Avenue Supermarket. Very good morning, first of all.
Good morning, Sanjay.
Yeah.
Please go ahead.
I have DMart, known as Avenue Supermarket.
Yes.
30 sale at the 1525 my buying price.
Okay. When did you buy
And
this?
I have been holding this stock at 2019. Since.
Okay.
So my first question is it possible to downgrade or should I add more at this level?
Is it possible to? I didn't catch that question. Is it possible to add more?
Yeah, I want to add more.
Okay.
If there is no problem with any fundamental.
Okay. So it's a fair question to ask, and congratulations for the patience that you witnessed. Perhaps you would have been looking for more of an upside based on the prospects that were discussed at that time in 2019 for Avenue Supermarts. Shaina, a lot's been said about the space, right? You have certain large players that have entered the retail market very aggressively, that are having to dial back on the operations that I have here, that they have rather. I'm talking about Reliance Industries. Avenue Supermarts, though, valuations have never been cheap. Would you add more at the current price?
Add only at lower levels because, as you mentioned, the competition is coming from all segments. You have the quick commerce that actually is putting a lot of pressure on Avenue Supermart. Also, in terms of the new competition, you have retail of Reliance, which is pretty aggressive, and you have others also that are there in the space and coming in. So the space is very competitive. Margins will remain under pressure. Of course, Avenue Supermart, given the quality of management, in the longer term, they will be able to manage and come out of it. But if you want to add closer to 3,200 levels. I don't think even current levels is a good time to add because you may see further time correction. Not so much price correction, but time correction. So you add it at dips.
And you know so much more about the nitty-gritties of Avenue Supermarts, right? So much of the consumption story is still expected to play out. So much of it will depend on the rural recovery, on the sustainability of the rural recovery, and urban, which is expected to come in the next year, right?
Absolutely, and also how all of these quick commerce platforms will play out in terms of their discounting pattern, because till now quick commerce, though going big on discounts and burning cashes, are still not able to match up to the discounts that Avenue Supermarts give. But Avenue Supermarts, after some point of time, will have to stop giving these discounts in order to maintain their margins. So it all comes down to how these discounts will be managed going forward. So that's the view with respect to Avenue Supermarts. But moving on, Ganesha Ecosphere is the next counter. Dilip from Hyderabad is holding 400 odd shares, bought at 1600 levels, and he wants to know whether he should hold or sell or make an average. He's sitting on a loss of around 80,000 odd rupees. Kush, I'll come to you. I know you'll say no to the average part, but hold or sell, what's the view like?
Well, there are scenarios, right, where it does make sense. And we are in a scenario in the market where averaging does make sense. If you've got a stock which has fallen just because the overall markets are actually, gone into a weakish kind of a territory, then buying that stock at a lower level makes sense. So this is one of the rare times where, averaging perhaps just might make sense. So yes, Ganesha Ecosphere is one stock which can be considered, for fresh additions at this level also, or in his case, he could consider an averaging, as well. Now, there is a double bottom formation near the 1300 mark, at least on closing basis. The volumes on the upside have started to pick up. My only concern here is that the 1420, 1430 zone might act as a bit of a resistance, but once that is taken out, the stock could catch up a steam, and 1650, could be the next level close to his fine price. So you could consider buying some at this level, but keep a very strict stop loss near the 1300 mark. If that is broken, then you might want to exit, because that's the near-term bottom or the medium-term bottom that the stock has made, and then any breach below this will negate the kind of up move that we're starting to see right now.
Okay, so add at the current levels, but with a strict stop loss of 1300 is the view coming on Ganesha Ecosphere. Suresh from Hyderabad is our next caller. Suresh, a very good morning to you. I believe you have a query on BEML.
Yes.
Go ahead with the query.
So BML, I bought it 3,800 and around 50 shares. So I'm in loss. And few days back, I called to NDTV Profit and it said like when it is come to 2,400 level, I think they were asked me to call again. So it recently tested 2,400 and it is bouncing back.
Right.
Can we average or hold it for some more time? So I'm a long term. I'm looking for an year or 2 years.
Okay, got your point, Suresh. I'll take your question with Shahina. He said that the stock is bouncing back from the levels that the analyst had suggested at that point of time. But he's a long-term investor, so what's the view like for the next 2 years for BEML?
Yeah, I think in terms of order book position, in terms of growth, the future looks to be brighter than what the past has been. Their numbers have been pretty disappointing. So I would say that considering the fact that capital expenditure will increase going forward, and BML is very well capitalized, very well positioned to capitalize on the same. So if you're a long-term investor, yes, you can continue to hold, and in fact you can average at lower levels. Of course, you are seeing a bit of bounce, but hold for now. And maybe you can look at targets of say something close to 2,700 to actually book profits if you're looking at maybe a 6 month to 1 year holding period. Otherwise, you could look to hold it for the longer term and average at lower levels.
Now, we don't often talk about very high ticket price stocks because often it's difficult for retail investors to pick these up. But we have exceptions to the rule, of course, and Bhupendra Mehta is one of those. He's writing in asking about Honeywell, which he's bought at levels of 40,000 and he's bought 16 shares. The stock is currently trading just below 35,000. It's up and about, it's about 2% higher. Shahina, on the fundamentals, would you hold or exit when you have the opportunity?
These are stocks which actually you hold for the long term. They could be portfolio stocks, and as you see, there's a lot of new capacity that's going to come up in electricity, in renewables, and Honeywell is very well positioned to actually participate in those projects. So I would say you can continue to hold for the long term. I think shorter term, you're going to see some bit of consolidation, maybe some time-wise type of correction, but you could continue to hold for the long term.
Okay, so hold is the view on Honeywell, by the way. And we've got a next caller. Nick is calling us from Hyderabad. Hi, Nick. I love your name. How can we help you today?
Good morning. I want to know about Wipro for the coming couple of months. I bought at 294 for 1,000 shares. So I just want to know what's going to happen in a couple of months. Hold, sell.
So help me understand why you purchased Wipro. And obviously, you've stipulated the time frame is just a couple of months, but what was the thinking behind it? You thought that IT would bounce back. You were expecting that things would settle on the global stage. Is that what you're thinking?
It's all because of Trump. He came back, and I thought, the IT thing, that's why.
Okay, all right. So it's a play on the IT space. Wipro bought at 294 levels, not too far away from the current market price of 285. Kush, on the charts, we've seen some subdued moves in the IT pack in the recent past, and that's understandable, I guess, because there are question marks, as Nick has just highlighted. How would you play this on the charts, though, for the next few months?
So, Alex, interestingly, Wipro is one of the large cap names which hasn't really fallen as much. It didn't really move as high as well, and that is also one of the factors why it hasn't really, given up too money or too much of the gain. But despite that, this is not one stock that regularly features on our buy list. Now, the good thing is that the stock's not too far away from his buying price. We've discussed in the past that the global, especially the US IT pack is also coming under pressure, and that might have a rub-off effect on the Indian names as well. So, not very constructive on the overall IT space. Since the stock is very close to its buy price, my suggestion would be to keep a stop loss near the 270 mark. any move closer to his buy price or about the 300 odd level should be taken as an opportunity to exit. If he does want to stick to the IT pack, FSL, First Source Limited, is one stock that has actually held its ground for the last month and a half in all the deluge that the market has seen, which is sign of a relative strength. Now, a closing above the 370 mark will give it further momentum. So my suggestion would be to exit Wipro close to or just above his buying price and switch to something like an FSL. The stop loss on this one comes in at 335.
Okay, so that's the view with respect to Wipro, and sell is the view coming in. The next counter that we're talking about is CG Power. 2,000 shares held by Kanak Kothari from Ahmedabad at the levels of 593 a piece. He wants to know whether he should sell or hold at the current levels. Shahina has not mentioned what is his view in terms of long term or short term, but your view with respect to CG Power, what's the outlook like?
Yeah, I would say that it looks pretty decent in terms of performance. The financial performance going forward. They've got a lot of order books, but in terms of valuation, it is expensive. So I didn't get the buy price, but I think he can continue to hold. He can keep a stop loss of deep stop loss, something close to about 550, and then he could hold it for the long term.
Alright, so that's the view with respect to CG Power. Our next caller, P. Somaya from Hyderabad, is calling in. A very good morning to you. How can we help you?
Good morning, madam.
Good morning.
I bought Birla Software at 690, 70 shares, sir.
Okay.
Can I hold or can I exit or can I add that?
Okay.
At present situation?
Okay, so you bought Birla Soft seeing the fundamentals, or did you see the charts, and how long have you been invested in this company? Mr. Somaya, can you hear me? Okay,
Yes,
I think we've... Yes, can you hear me? Okay, I think
Yes,
we've lost
madam.
his feed. If you can hear me, can you tell me how long have you been invested in this, and did you see the fundamentals of the company or the charts? Okay, I think we've lost him. No worries. Kush, I'll come to you. Birla Soft is the counter. What's the view like with respect to the charts?
Again, very similar to what we just discussed about Wipro. In fact, for Birla Soft, what happened is that the stock has taken, a massive beating, and not only in line with the market. The stock actually started falling somewhere early 2024. So the weakness has been, playing out ever since the last year and a half. The move that you're seeing in the last two to three sessions is actually a dead cat bounce, a rebound from deeply oversold territories. So my suggestion would be to exit Birla Soft at the moment. And like we discussed just a while ago, if he wants to consider something in the IT space in particular, FSL is a stock to go.
The next counter that we're talking about is a pretty small counter, 1,500 crore market capitalization. Carousel is the name of the company, Carousel Limited. I'm looking at it, and it is a manufacturer and trader of quartz kitchen sinks and stainless steel kitchen sinks, as well as bath products, tiles, kitchen appliances and accessories. I'm not sure if you have a view on this one, Shaina, but we've got Mr. Sankara Rao, who's writing in from Amravati, who's bought at levels of 707. The stock is currently trading at 533, and he's incurring a significant loss in this counter. Would you suggest that he holds on or shifts into something else?
I think as of now, given the bounce that we are seeing and the performance is, pretty average. There was some bit of softness in the last quarter. So if he is a short-term investor, I think he's going to continue to make losses. So we are seeing a bounce as of now. He could look to exit maybe, at slightly higher levels, 560 and odd, he can exit, and he can keep a stop loss of close to about 500. So I don't see too much happening. He can take this opportunity of the bounce to exit.
All right. So limited view, of course, on this counter, but then you might want to exit when you have the opportunities of view from Shahina. Shankar is calling us from Bengaluru. Hi, Shankar. Good morning. How can we help you? How can we help you today?
Good morning, sir. I am holding 55 Nilkamal Plastics share at 2056 because I have been making some money in that, buying and selling.
Sorry, are you still there?
Right.
Sorry, I lost you for a few seconds there, but you said that you bought it at a level of 2056.
Yeah.
You've been buying and selling this. You've been trading in this share.
Yeah, I have made some money on that stock. Because the price was going, I stopped at that 55. So it is at 2056.
Yes.
So whether because prospect is good. Normally I look for all the ratios, sales growth, quarterly growth, profitability, etc. I look at ROE, ROC, etc.
Sure.
I'm a banker by profession.
Right.
I was in trading treasury also.
Okay. So the question is for the long term, sir. You'd like to hold this for the long term? Okay. So Shahina, Neel Kamal, and it's a household name. The stock has been under a tad bit of pressure though, down about 20% over the last 3 months. Would you hold on?
Yeah, you can continue to hold, but do keep a stop loss. I think he can keep a stop loss which is closer to his buy price, or maybe 1,550, just to be safe. But he can hold. The numbers last quarter were not that good, but at the same time, the balance sheet is pretty strong, and he can hold it. I would say the near term target could be something like 1,700. So hold it for 6 months, and probably he'll continue to make some money.
All right, hold it for 6 months is the view coming in on Neel Kamal. Okay, the next caller that we're going to talk to is Pawan Kalyan, who is calling in from Vizag. Pawan, a very good morning to you. How can we help you?
Yeah, very good morning. I just brought a Medplus share at the rate of 735 a few months back.
Okay.
And I'm concerned about, is this right time to book harvest loss, or should I wait for long term, like 2 or 3 years?
Okay, so your outlook is for 2 to 3 years. So you have seen the fundamentals of the company, if I'm not wrong.
Yeah. For me, valuation-wise, it's too expensive right now, but for competition-wise, I feel better in this segment of Medplus, stuff like that.
All right, Pawan. Shahina, I'll come to you. He's done his homework well, but what's the view like when Medplus comes into picture?
I don't really have too much of a long-term view on it, but I think, in terms of price, this looks like it's in a corrective phase. So I will pass this question actually, because I don't have too much information.
Okay, Medplus on the charts, Kush, how is it faring?
What you're seeing is a bit of a consolidation and attempt at crossing above the 200-day moving average on a sustainable basis, which comes close to the 720 mark, which incidentally is also close to the buying price that he has. So my suggestion would be to hold this one. The momentum is missing. The volumes are fairly thin, if you ask me. So I am not expecting a very sharp kind of an up move on this one. But nonetheless, along with the market, this stock does kind of recover, then he could see some profit from this one. So keep a stop loss near the 695 mark. On the way up, closing above 720 could push the stock to 740 and then perhaps even a 765 kind of levels. That's where you want to book profit. As I said, the volumes aren't great. The momentum might be missing. So you might want to exit, soon as you start doing some green.
It is a call on MedPlus. It's time for the rapid fire segment. Shahina and Kush, you know what this means. We'll throw as many questions at you over the course of 2 minutes, and do keep your answers as concise as possible. Nidhi's got the first question. She's writing in from Ambala. PFC is the name of the counter. She's bought at levels of 530. She's wondering whether to average at the current price. Shahina, on the fundamentals, what should she do?
Yeah, hold and average also.
Okay.
All right, M&M
You
is
can buy. It's a buy.
Okay, buy is the view coming on PFC. M&M is the next counter, bought on 5th September. Okay, Amara Raja is, my bad. Amara Raja is the next counter, bought at the levels of 1447. 50 is the quantity. Should he hold or sell at the current levels? Kush, on the charts?
Continue to hold, keep a stop loss at 940.
Okay. IGIL is the name of the counter. 417 is the buy price. Venkat wants to know, should he add more at the current price? What are the long-term prospects, Shahina?
I would say avoid.
Okay, Swiggy is the next counter. 5,900 shares bought at the levels of 455. Avinash wants to know whether he should hold or exit. Shahina, what's the view?
I would say it's a hold.
3i Infotech is the name of the counter. Tara from Trichy wants to know, she's bought at levels of 500. Would you suggest a hold? Kush?
Sorry, what's the buying price?
36, sorry. 36, sorry, my bad. 36.
Sure. You could continue to hold, but keep a tight stop loss around the 21 mark.
Okay, Suzlon Energy is the next counter. 2,000 shares bought at 65 rupees. Should the person hold or exit? What's the view, Shahina?
I would say exit.
Okay, BHEL bought at levels of 322, currently trading at around 200, I believe. Okay, would you hold or exit? Joydeep wants to know. Kush?
Hold.
Okay, IRB Infra is the next stock. 657 is the quantity at an average price of 56. Should he hold or exit? China, what's the view?
It's a hold.
Okay, ease my trip very quickly. Would you hold or exit? This is Manikanta. I don't know the buy price, but a lot of negatives here. China?
I would say it's a hold.
Okay. All right. On the next show, I'm going to ask you what you think and why you think that, but it's a hold for now.
Okay.
Thank you so much to the both of you for joining in, for answering all the questions that you did. Absolute pleasure having you on the program. All right, that brings us to the end of this edition of Ask Profit. We ended on a bit of a tantalizing note because we have to find out why Shahina thinks Ease My Trip is a hold, but we've got lots lined up for you on KYC. Do stay tuned for that. And this is NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel